Alright, hey guys, so I am going to explain to you guys how to solve exercise 23 from the homework. So I pulled it up here. This problem is basically just having you practice how to do closing entries for temporary accounts, how to like zero out the accounts and things like that. So as you'll recall from the reading, I'll pull it up here, there it has this nice little diagram that shows you where the accounts get closed out to. So revenue and expense accounts get closed out to income summary, and dividends and income summary get closed out to retained earnings. So this is going to make more sense as I explain it as we go along. So first of all, we have August 31st, we're closing the revenue accounts. So as you guys can recall from the last chapter when we were introduced to debits and credits, revenue is a credit. It usually has a credit balance. I added these acronyms to the chat last week. I don't know if you guys saw them, so I put them up here as well for you guys. These helped me to remember which accounts were debits and which accounts were credits, because it was just really hard for me to get that straight. And so here we have DEAL, the acronym DEAL, dividends, expenses, assets, and losses. These are all debit account balances. Then credits, the acronym is GIRLS, and there's gains, income, revenue, liabilities, and stockholders' equity. So like I mentioned earlier, we're looking at revenue, which is a credit. So if we want to zero out the revenue accounts, we have to do the opposite, and we have to debit it. So that's what we're going to be doing down here. Get rid of this. All right, so we're going to come here, and we are going to look for the revenue accounts. So right here we have service revenue and rent revenue. So I'm going to go and type those in. And rent revenue. Okay. And then you want to look at the after adjustment, not the before adjustment, because we're closing out these accounts. All the adjustments have been made. The adjustments are what matters. So that's what we're going to be doing here. So service revenue, it's $35,520. And then for rent revenue down here, it's $14,210. Perfect. And then, like I mentioned earlier from the diagram, your revenue accounts get closed out to income summary. So that is how you're going to zero them out, is to income summary. All right, so to balance everything out, income summary the credit of income summary has to equal the total debits for the revenue account. So if you add those together, we're going to get $49,730. All right, so now we're going to come down here and we're going to be closing the expense accounts. So this is going to be, the process is going to be very similar to what we did up here, with one major difference. So if you guys remember from the acronym, expense is part of the acronym DEAL, which means it's a debit account. However, like I explained for the revenue accounts, we're trying to zero it out. So we're going to do the opposite. So since expense is usually debit, we're going to credit all those accounts. So that's what we're going to do here. And credits are always listed second. Like they're not the first. Debits are always listed first and then credits. That's why we're going to skip this line up here and start putting our expenses in. So we're going to come over here and look at our expenses. So we have a salaries and wages expense. And then we have a supplies expense and a rent expense and insurance expense and depreciation expense. Perfect. All right, so then like we did up here, we're going to be looking for the after adjustments, okay? So we're going to be looking in this column right here for all these expenses. And we're going to just fill them all in. So salaries and wages is $18,030. And then supplies is $1,440. Rent is $17,223. Insurance is 1,370, and depreciation is 1,200. Okay, so to zero out this balance, and sorry, I'll come back here for a second. So we're closing out the expense accounts. These also close out to income summary. So that is what we're going to put up here. Okay, and like we did previously, we have to zero this out. So you have to balance it. So we're going to add up all these numbers, and that's what we're going to debit to income summary. So if you add all those numbers up, you're going to get 39,263. All right, perfect. So now we're going to come down here and we're going to be closing. So this says income/loss. This just means we're closing the income summary is what this means. So to figure out this one, we need to look at what we have already debited and credited previously. So what that means is we're looking at this up here, okay, and we're looking at this right here. So as you can see, the credit is definitely bigger than the debit. So when we subtract those two numbers, we're going to end up with a credit balance, right? So if we do 49,730 minus 39,263, we're going to end up 10,467 on the credit side. Sorry, I would draw a balance sheet on here, or like a T balance, but I'm not tech savvy enough to know how to do that. So I hope that made sense. We'll attempt to do this and see if it works. Okay, so let's move this down here. All right, so if we have a T balance, okay, and we're gonna have debit, and then we're gonna have credit. Oh my gosh, this is so awful. But anyway, so you're gonna have the 39,000 number over here, and then you're going to have the 49,000 number over here. And what I'm just saying is like your final balance down here is going to end up being on the credit side. I hope that makes sense. I apologize if it does not. We're going to exit out of that and erase this. Okay. So hopefully that kind of made sense. If it didn't, I apologize. But what I hope that you got from that is you're going to end up with a credit balance for your income summary. We're doing the exact same things as earlier. So if you end up with a credit balance, to cancel it out, you're going to want to debit it. So we're going to put that number actually over here. All right. For some reason, it won't let me get out of the eraser. Oh, there we go. Okay. So we're going to put income summary right here, and it's going to be, let me get that number again, 10,467. All right. Then we're going to come back to our cute little chart here. And income summary is closed out to retained earnings. So that's going to be our other section down here. So retained earnings. Okay. So obviously these have to balance. So this is also going to be 10,467. Okay, so then we're going to come down here, and now we're going to be closing our dividend account. So to close dividends, if you recall from the chart you just looked at, dividends also get closed to retained earnings. We know that's going to be in here somewhere. If we look, also, I'm so sorry, I'm all over the place. Dividends is part of our DEAL acronym, so it's usually a debit. It has a debit. Oh my gosh, has a debit balance. That's what I'm looking for. It usually has a debit balance. So that means we're going to do the opposite, and we're going to credit it. So we're going to come here and type in dividends. Dividends. Okay. And we're going to credit it, and we're going to come over here and look for dividends. Look for the after adjustment value, which is 2,660. I just lost it. Dividends. 2006 or 60. Perfect. All right. And then, like the chart showed earlier, it's going to get closed out to retained earnings. And it's going to be the exact same number as before so that it balances. All right, and that is how you solve exercise in chapter 4, number 23. I hope this made sense. I hope this is helpful for you guys. Let me know if you have any questions in the comments down below. Thanks.